name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this Inter CA May 2023 amendment lecture. In this lecture, we will be covering amendments which have taken place from 1st May 2022 to 31st October 2022. There is a PDF link which is attached to this video. Please download that PDF and take a printout of that. Only thereafter start watching the video further. I hope you have taken the printout of that PDF by stopping the video and then you are proceeding to watch further. Now, basically from this PDF, we will be covering the amendments which can be marked in these pages. And secondly, whatever are the additional amendments, we will write it in the notebook. That is how we will be proceeding with the amendments. So, let's see the pages one by one. First, we will talk about exemption chapter, where there have been various changes because lot of entries have been deleted and some entries have been modified. Firstly, you will delete this hotel related exemption which was available up to 1000 rupees per day or equivalent. That means at present any hotel accommodation will be liable to GST. You can mark this as amendment. Then there was an exemption with regard to renting of residential dwelling for use as residence. Twin condition. One, it should be a residential property. Second, it should be used as a residence. What has changed? Here, the law has added a sentence. Except when rented to a registered person. That means when a residential dwelling is rented to a registered person, then the exemption will not be available. Say suppose JK Shah classes has taken a premise on rent being a residential property for stay of its directors. Then the premise which has been taken on rent is taken on rent by JK Shah classes. So landowner giving a residential property on rent to a registered person, even if it is for use as residence, this will be taxable. And the government has clearly said that this will be covered under reverse charge mechanism. We will again see this when we deal with reverse charge mechanism changes which have happened. But we are very clear with one aspect, that if a residential dwelling for residence, exemption is now no more there. Earlier also, residential dwelling when it was given for office use, it was taxable. Now, if it is given for residence use, still it will be taxable provided it is provided to a registered person. Sir, if an unregistered person is taking a house on rent, then in that case, even today the exemption is available because the exemption has been removed only to one extent, and that is when it is given to a registered person. In all other cases, even today, residential dwelling for use as a residence enjoys a exemption. Okay. Then we move to the next page. See, there used to be a government related entry. We used to say any service provided by government or local authority enjoys a exemption. And then there was except. In this except, there used to be 4 limbs. First one was speed post, express parcel post, life insurance, agency services provided by Department of Post to any person other than government. Second one used to be transportation of goods or passengers. Third one, service in relation to vessel or aircraft. And last one was any service other than 1, 2, 3 provided to business entity. This is how it used to look. Now this remains as it is. Then what has changed, sir? First entry. First entry, now it reads as service provided by Department of Post. That means earlier only 4 services of Department of Post were taxable. All other services provided by Department of Post were exempt. But now any service provided by Department of Post is taxable. No exemption, sir. No exemption except for one small entry which I will discuss. Otherwise, there is no exemption for Department of Post. Department of Post taxable under forward charge. So all these three remain taxable under forward charge as they were earlier. The only change is all services by Department of Post are now taxable. So you will also delete this line. Earlier basic postal service, registered post, all these used to enjoy an exemption. Now those exemptions have been removed. All services by Department of Post are taxable. But government has given one relief. What is that one relief, sir? Book post, inland letter, ordinary post, where envelopes weigh less than 10 grams are exempt. So this enjoys an exemption even today. Less than 10 grams are those ordinary post which normally the postman throws on the floor of the building. Normally these are delivered when the postman wants and if the postman wants. Those less than 10 grams envelopes enjoy an exemption. Otherwise, all other services by Department of Post are taxable. These will be available as exemption only when the condition is met. Otherwise, it would be taxable. We will see the new exemption entries. There also you will find this entry and I'll explain it to you. Okay. Then come to the next page, FSSAI. Exemption deleted. Earlier, FSSAI used to enjoy an exemption. Now, services provided by FSSAI are taxable. Okay, come to the next page. Now, railway equipment used to enjoy an exemption by rail or vessel. But now, this exemption is removed for railway equipment. So railway equipment is deleted. Now the exemption for rail, vessel, goods transport agency remains same. All others are same. Only that railway equipment point is deleted. Then there used to be an exemption for aircraft or vessel from India to a place outside India. This was exempted till 30th September 2022. Government has not extended this exemption further and hence transportation of goods from India to outside India, whether through a aircraft or through a vessel, is now taxable. So you will draw this near this entry because now from 1st October 2022 it has become taxable. Mark it as important for your exams. Now this exemption will not be available for aircraft or vessel. So transportation of goods from a place in India to a place outside India will now be subject to GST. Don't forget, when we say India to outside India, we are talking about the movement of goods. not the location of supplier and recipient. Okay. Then there used to be a exemption for 1500 and 750. This exemption is also deleted. GTA used to enjoy an exemption depending on single carriage, single consignee. This exemption is also deleted, so you don't have to check 750 or 1500. In such cases, it would be liable to GST. Okay. Coming to transportation of passenger sector, see, there used to be an exemption with regard to any flight starting or terminating in northeastern state, including Bagdogra in West Bengal. The exemption remains as it is, but here government has added economy class. So earlier the exemption was available only for transportation by air, be it economy or business class, it did not matter. But now the exemption has been curtailed only to economy class. That means at present any flight starting or ending in northeastern state, including Bagdogra, will be exempt provided it is economy class. The moment it is a business class ticket, it would be liable to GST. Okay. Then coming to agriculture sector, very small changes. Fumigation in a warehouse of agriculture produce, entry is deleted. Storage and warehousing, cereals, pulses, fruits and vegetables enjoy an exemption. Everything else is deleted. That means storage and warehousing, only 4 things will enjoy an exemption: cereals, pulses, fruits, vegetable. Sir, what about other agriculture produce? See, warehousing of agriculture produce already enjoys an exemption. There is no change in that. The change is only with regard to some non-agriculture produce which were earlier exempted for storage purposes. But now that entry has been modified, so you don't get the exemption to that extent. Only 4 will now be eligible: cereals, pulses, fruits, vegetables. Okay. Then warehousing of minor forest produce is also deleted. The exemption is no more available. So 3 entries deleted. One is fumigation in a warehouse of agriculture produce. Don't forget, fumigating at the agriculture farm. What is fumigation, sir? Pest control at the agriculture farm is even today exempt. We are talking about fumigation in a warehouse which was earlier exempt. Now it has become taxable. First is this. Second, minor forest produce, storage, warehousing deleted. Third is storage and warehousing of various non-agriculture produce has been curtailed by government. Now only 4 things are there in that. Okay. Coming to healthcare service, see, healthcare service is modified to some extent where any room charges exceeding 5,000 per day will now be liable to GST, except ICU, CCU, CCCU, NICU. Special cases rooms, those still enjoy an exemption. Otherwise, if the room charges is more than 5,000 per day, then it is liable to GST. That is one change which we will see going forward in the new exemption entries. But let me also tell you, some entries have been deleted completely, like common biomedical waste treatment operator to clinical establishment, deleted. Now it will be taxable. Preservation of stem cell is deleted. Now it will be taxable. And here you will write room charges, only room charges, not any other charges, exceeding rupees 5,000 per day, within bracket you will write except ICU, intensive care unit, CCU, critical care unit, CCCU, cardiac critical unit, NICU. NICU is neonatal intensive care unit for newborn babies. Close the bracket, is taxable. Now read it carefully. Exceeding 5,000 per day is taxable except for ICU, CCU, NICU, CCCU. So ICU even today 10,000 per day will also enjoy a exemption. There will not be even a single rupee taxability. Okay, you will come across this entry again in another page where new entries are shown. Okay, then we come to the next segment. On the next page you can see training or coaching. Now training or coaching in arts and culture, earlier it was a plain language. Arts and culture provided by any person used to enjoy an exemption. Now what has government done? Government has first of all shifted this recreational activity here. Recreational activity in relation to art, culture by an individual. By an individual. Be very careful. That means arts and culture exemption will now be available only if it is provided by a individual. If anyone else is providing recreational activity training and coaching in relation to art and culture, then in that case now it would be liable to GST. So be very careful. Now arts and culture provided by a partnership firm, a body corporate, a LLP will be liable to GST. The exemption is only available to individual. Careful. So if a person is providing dance coaching and he is an individual proprietorship, then in that case will he enjoy an exemption? The answer is yes. Remember one more thing, even if it is a charitable trust, it will not get the exemption for art and culture training and coaching. So training and coaching for art and culture is restricted only when it is provided by a individual. Other thing remains same, sports training or coaching by a charitable entity. Now for sports, there is no need to check whether it's a recreational activity or not. Clear? Okay. Then services provided by RBI and from outside India, foreign exchange management received. Both the entries are deleted. So RBI related exemption is completely deleted. So services by RBI is taxable, to RBI is also taxable. Earlier to RBI was anyways taxable, but from outside India receiving foreign exchange management services used to enjoy an exemption. Now that exemption is removed. So now by RBI to RBI, both the things are completely liable to GST. Other things related to embassy, that is foreign diplomatic mission, remains as it is. Okay. Then on the next page you will find slaughtering of animals. This used to enjoy an exemption, but now the exemption stands removed. Then you will come to the next page. IRDA exemption is removed. SEBI exemption is removed. GST network exemption is removed. Leasing of assets by Indian Railway Finance Corporation. This was already removed for November 22 exams. This stands as it is. So IRDA exemption, SEBI exemption removed. GST network to government is also removed. Okay. Now coming to payment of GST chapter. Now, payment of GST chapter, first let's see two small changes, then one important change. Small changes are two more modes added, UPI and IMPS. UPI and IMPS, these are the two important modes which are now added. So you'll write amendment here and you'll mark UPI, IMPS. Already credit card, debit card, net banking, all this was already allowed. But now a new mode is allowed, UPI/IMPS. Second important yet small change. You'll mark this at the end and mark it as amendment. What is this, sir? Now, you know that already there was a facility to transfer money within eCash ledger between different major minor heads. Like, if I have money lying in I tax, I can transfer it to C tax, I can transfer it to S tax, I can transfer it to C interest, I can transfer it to I interest. Full flexibility was given within eCash ledger by filing a form called as PMT09. This facility was already available. Now government has added one more facility. Just imagine this. JKSC Bangalore branch has balance in eCash ledger. Can they transfer this to JKSC Mumbai branch? The answer is yes. Now it is permitted in the law. JKSC Bangalore branch having money lying in eCash ledger can be transferred to JKSC Mumbai branch. Earlier, this facility was not there. Now this new facility has come. When you read the law, you'll find C and IGST, but don't worry, we read CGST law. So that's why C and IGST is there. SGST law will have SGST transfer capabilities depending on state legislatures. Be very careful about one thing. You can transfer this money only when there is no liability on JKSC Bangalore. Say suppose there is a e-liability balance which is there on JKSC Bangalore. Then the government is saying first you pay your liability, then help others. The government is very clear that you can transfer money from one ledger to another only when you don't have a liability payable. So JKSC Bangalore can transfer eCash balance only when they don't have any liability in their own account at that point of time. Sir, what about e-credit transfer, sir? People, don't forget that all these facilities are only there for eCash, not for e-credit ledger. Fair enough. Let's have a look at the point. Transfer of C and I from one eCash ledger to another between distinct persons. Government has allowed such transfer if transferor does not have any unpaid liability in his e-liability ledger. You better write same PAN mandatory. I mean, the law clearly says distinct person, but you better write and keep. Sir, can JKSC Bangalore transfer to you? No, that is not allowed. It can be done only under the same PAN, not otherwise. Okay. Now, mark the next page amendment important. It's a very important amendment. Let me first give you a overview of this. Then we will see the point. Now, see what we already knew about interest. If you delay paying interest, if you delay payment of tax, then interest will be 18% per annum from due date till date of payment. This we already knew. from the due date till date of payment, interest at 18% per annum will be applicable. If output is 1 lakh, ITC is 80,000, then interest will apply on 20,000, which is payable through e-cash ledger. But there is one important condition in this. The liability of a particular month should be reported in that particular month. For example, if there is a July month liability, then the July month liability has to be paid in July GST return. Then whatever you are paying through e-cash ledger, on that interest will apply. Sir, what if July liability I am reporting in October GST return? If you are reporting July liability in October GST return, then in that case, interest will be applicable on the gross liability, not just what you are paying through e-cash. Plus, if a person is paying a liability after receiving a notice under 73 or 74, again in that case, interest will apply on entire 1 lakh of liability. This we already knew. This remains as it is. Then what is added, sir? ITC wrongly availed and utilized. If ITC is wrongly availed and utilized, then in that case, interest will be applicable at 18% per annum. But sir, from where? People, see the wordings. Interest will apply only when you have availed the ITC and utilized the ITC. Sir, what is availing? Availing is taking it in e-credit ledger. What is utilizing, sir? Utilizing will mean using that to pay your liability. Only when both the things have happened, interest will be applicable. Fair enough, sir? It should be availed and it should be utilized. But interest will apply from which date, sir? It will apply from the date of utilization till date of payment or reversal, as the case may be. Date of utilization. Sir, when can you call something as utilized? You can call it as utilized when you use it to pay your liability. Sir, if I have not utilized something, I'll give you an example. Say suppose I have wrongly availed ITC of 30 lakh, but my e-credit balance is 1 crore. Have I utilized this wrongly availed ITC? Because I have a balance of 1 crore in my e-credit ledger. And with time, what happens? Whenever I am filing my GST return, this might reduce. So say suppose at one point of time, it comes to 22 lakh. The moment it comes to 22 lakh, that means I have utilized 8 lakh. And on 8 lakh, interest will be applicable. Sir, what about this 22 lakh if I reverse now? If you reverse without utilizing that ITC, then interest will not be applicable, because the law is very clear. Interest will be applicable only when you have availed and utilized that ITC. Unless you utilize it, interest will not be applicable. Sir, is the date of utilization defined in the law? The answer is yes, date of utilization is defined. The law says date of utilization will be the date when the balance in e-credit ledger, falls below the wrongly availed ITC. Sir, say suppose this becomes 0, then I have utilized the entire 30 lakh. But sir, when I have utilized? Due date for GST return of that month or date of filing GST return of that month, whichever is earlier. Say suppose you file the return for August, on 18th September. What's the due date? Sir, due date is 20th September. It will be said to be utilized on 18th September. Sir, if I file late, if you file late, then it will be regarded that you have utilized it on 20th September. Clear with this? Yes. So to sum up, in case of delay in payment of tax, 18% per annum as usual. In case of wrongly availed ITC and which has been utilized, interest at 18% per annum from the date of utilization till the date of payment or reversal of such wrongly availed ITC. Let's have a look at the provision. We'll find one more small point that I will tell you while seeing the provision. And I expect that RTP or your MTP will have a question on this because May 23 will be the first examination handling this. Let's see. ITC wrongly availed and utilized. Interest at 18% per annum. Let's see note 2. Interest shall be calculated on the amount of ITC wrongly availed and utilized from the period starting from date of utilization till the date of reversal or payment of such amount. Further, an explanation has been added under new rule 88B to provide that ITC availed shall be said to have been utilized when the balance in e-credit ledger falls below the amount of ITC wrongly availed. The moment balance in e-credit ledger falls below the ITC wrongly availed, that's when you have utilized it. And the extent of such utilization shall be the amount by which balance in e-credit ledger falls below the amount of ITC wrongly availed. Further, date of utilization will be due date for filing return or actual date of filing return, whichever is earlier. In other cases, sir, other cases meaning, now what can happen is sometimes you receive a notice from department and based on that notice you pay the liability as on a particular date. Say suppose 10th I received a notice, 10th I paid it through my e-credit ledger. That means my balance in e-credit ledger will come down on 10th. In such cases, the day it is debited from my e-credit ledger, that is considered as date of utilization. Let's see. In all other cases, date of debit in e-credit ledger. The day it is debited in e-credit ledger, that day will be considered. Okay. So this was the amendment with regard to payment chapter. Now coming to invoice chapter. On the next page, you will find credit note, debit note. Credit note, debit note. The last date to issue credit note is 30th November after financial year or date of filing annual return, comma, whichever is earlier. You remember earlier the last date to issue credit note was due date for filing September month return after the financial year. Government has increased it by around 1 month 10 days. Earlier it was due date for filing September month return, that is 20th October. Now government has made that date as 30th November. So technically till October return you can issue credit note and October return due date is 20th November. 10 days extra government has given by giving a fixed date of 30th November after the financial year. This is a welcome provision where government is giving you more time. Same thing has happened in ITC chapter also. We will discuss it in some time. Okay. Then one small change in e-invoice. Earlier, the limit was 20 crores. Now, the limit is 10 crores. So, any person whose aggregate turnover in any of the preceding financial year starting from 17-18 exceeds 10 crores is required to generate e-invoice. And you know, B2B and exports, for these two things you require e-invoice. Plus, you remember there were some exceptions: SEZ unit, insurance company, banking company. Government has also said that they have to give a declaration in the invoice that we are exempted from issuing e-invoice even though aggregate turnover exceeds limits. So they have to give a declaration so that the buyer gets to know that SEZ unit enjoys a relief. They are not required to issue e-invoice. So that declaration has to be given in a invoice, because you very well know, if a person is required to issue a e-invoice and if he does not issue, then the recipient will not get ITC. But these persons are not required to issue e-invoice. Clear? Okay. Okay. Now we see the exemption entries which have been newly introduced or modified. See, first remember that all services by Department of Post are taxable. Exemption is granted to postcard, inland letter, book post, ordinary post, envelopes weighing less than 10 grams. Only this service enjoys a exemption. Otherwise, all other services by Department of Post taxable. We discussed this. Then healthcare services, this remains same. This is the amendment. Let's see. Government has separated room charges. Let's see. However, nothing in this entry shall apply to services provided by clinical establishment by way of providing room other than. That means they will get an exemption. ICU, CCU, ICCU and neonatal intensive care unit having room charges exceeding 5,000 per day for a person receiving healthcare service. This will be exempt. ICU, CCU, NICU will even today enjoy a exemption even if it is more than 5,000 per day. But other general rooms, if it is more than 5,000 per day, room charges will be taxable. Sir, what about other things in healthcare? That will continue to enjoy an exemption as it is. Only room charges have been made taxable. Okay. This entry also you had seen. Service by way of training or coaching, recreational activities, art or culture by an individual, and sports by a charitable entity registered under 12AA or 12AB. So, changes: recreational activity shifted below. So, for sports, no need to check whether it is for recreational activity, and art and culture, the law clearly says by an individual. Okay. Now, one new exemption which has been added for a tour operator. See this carefully. See, tour operator is providing service to a foreign tourist. Now, if the service is for a tour wholly outside India, wholly outside India, if it is for a tour wholly outside India, then in that case, enjoys a exemption. There was already a exemption entry for this. If it is for a tour wholly in India, then it is taxable. Now the problem was, what if tour is partly in India and partly outside India? Partly in India and partly outside India. What will happen to this? That was the issue. Now, government has said that if tour is partly in India and partly outside India, for the part which is in India, that will be taxable. For the part which is outside India, this will enjoy a exemption. This is exempt, sir? Yes. This will enjoy a exemption. Now the question is, how will we determine how much is outside India? The law has clearly provided that. The law says it will be based on number of days proportionate calculation. And maximum exemption is 50% of tour value. Maximum exemption will be 50% of tour value, total tour value. Let me give you an example. See this carefully. Say suppose 3 nights Goa, 2 nights Sri Lanka package for 1 lakh. Now what is government saying? First do proportionate. Now if I do proportionate, how much is outside India? Sir, 2 nights. So 2 divided by 5 into 1 lakh, 40,000. Sir, 40,000 will enjoy an exemption? Yes, 40,000 will enjoy a exemption. But exemption is restricted to 50% of tour value. Sir, 50% of 1 lakh is 50,000, whichever is lower. So you'll get an exemption of 40,000. Maximum exemption is restricted to 50%. Now let's change this. 3 nights Sri Lanka and 2 nights Goa for 1 lakh. Sir, then in that case 3 by 5 into 1 lakh, 60,000 exemption, sir. No, 60,000 restricted to 50,000, because the maximum exemption which can be claimed under this provision is 50% of the total tour value. So government has also defined how will you calculate number of days. Government has said if 12 hours or more, then it is considered as 1 day. If it is less than 12 hours, then it will be considered as half day. So in the exam, you could get a half day calculation as well. And remember one thing, tour operator providing service to an Indian tourist, there is no exemption. It is completely taxable even if tour is outside India. So be very careful on this aspect. Let's have a look at the provision. Thereafter, if you want, you can copy this. Examples are given in the notification itself by government. We will read that. Let's see. Service provided by a tour operator to a foreign tourist, which is partly in India and partly outside India, to the extent the value of tour operator service which is performed outside India. So the part which is performed outside India, that will enjoy a exemption. Let's see note 1, note 2. value of services performed outside India shall be such proportion of total consideration charged for entire tour which is equal to the proportion in number of days. So you have to do a proportion in number of days for which it is performed outside India. So to the extent it is outside India, you will get an exemption. To the total number of days of the tour or 50% of total consideration for entire tour, whichever is less. Okay. In making the above calculation, any duration of time equal to or exceeding 12 hours shall be considered as 1 day, and any duration which is less than 12 hours will be considered as half day. Let's see the examples. 3 days in India, 2 days in Nepal. Now you understand this very well. For 2 days Nepal, you'll get the exemption. Then you have 2 days in India, 3 days in Nepal. More number of days in Nepal, so it will be restricted to 50%. 2.5 days in India, 3 days in Nepal. Again, it will be restricted. Okay. Let's discuss the circulars which are newly issued and it is included in the statutory update book. Simple circulars, as we already know the law, it will be easy for us to deal with the circulars. Let's see. Clarification on utilizing amount available in e-credit ledger and e-cash ledger. How will you be able to utilize e-credit and e-cash ledger? Let's see. Issue 1. Whether the amount available in e-credit ledger can be used to pay any tax under GST law? The answer is yes, it can be used to pay any tax under GST law, but not tax payable under reverse charge mechanism. Tax payable under reverse charge mechanism will have to be paid through e-cash ledger only. Otherwise, any notice, any demand, any output tax you can pay through e-credit ledger. So this we already knew. These circulars have clarified what you already know. Let's see. It is clarified that any payment towards output tax, whether self-assessed in the return or payable as consequence of proceedings initiated under the provisions of GST law, can be made by utilization of amount available in e-credit except RCM. RCM you cannot pay through e-credit. Okay, let's see the second one. Whether amount available in e-credit ledger can be used for making payment of any liability other than tax. E-credit tax can be used only for making payment of tax. We are already aware of that. Let's see. As per section 49(4), e-credit ledger can be used for making payment of output tax only under CGST Act or IGST Act. It cannot be used for making payment of interest, penalty, fee or any other amount under the said acts. Similarly, e-credit cannot be used for payment of erroneous refund. People, this part you can just mention CA final, because refund you learn at CA final level. Okay. Whether amount available in e-cash ledger can be used for making payment of any liability under GST law? The answer is yes. E-cash ledger you can transfer from one head to another and then use it effectively. No problem at all. Allowed? Yes. As per 49, amount available in e-cash ledger may be used for making any payment towards tax, interest, penalty, fee or any other amount. Okay. Then there are some small clarifications which has been kept in your statutory update book, so it is better to know this, and it could come as a 2-mark question or a 4-mark theory question. GST implication on perquisites. People, if perquisites are part of a contractual agreement, whether GST will be applicable on that. Think. Perquisites as part of a contractual agreement. Employer is giving something to employee as part of a contractual agreement. The winning answer is no GST. If it is part of a contractual agreement, then it will be covered under negative list, because if it is part of employment contract, then employee is providing services and in return employer is giving these perquisites. So government has clarified that if it is part of contractual agreement, then it is not a supply covered by negative list, no GST applicable. Okay, let's see the next one. ITC on respect of leasing of assets other than motor vehicle, aircraft, vessel. People, motor vehicle, aircraft, vessel, if you take it on rent, then blocked credit section 17(5). But does this block credit point apply to other assets which you have taken on rent? Like if a person takes laptop on rent for his business, will that also be block credit? CBIC has clarified, no, it will apply only to motor vehicle, vessel, aircraft. Let's see. CBIC has clarified that restriction under 17(5), that is block credit, is applicable only in respect of input services by way of leasing of motor vehicle, vessel, aircraft, and not for input services by leasing of other goods. For other goods, it will not be applicable. Okay. Let's see other clarifications. These are basically dealing with exemption clarifications or supply based clarifications. GST on application fee for entrance or fee charged for eligibility certificate or migration certificate by education institution. What do you think? Application fee, eligibility certificate, migration certificate issued by education institute to students or prospective students. CBIC has clarified it will enjoy an exemption because it is a service provided to students or prospective students. Exemption will be available. Okay. There was an exemption regarding transit cargo from to Nepal and Bhutan. Now the question was, when the law says transit cargo to Nepal and Bhutan, will it cover from Nepal and Bhutan as well? CBIC has clarified that the exemption entry which says to Nepal and Bhutan will also cover from Nepal and Bhutan. So transit cargo from or to Nepal and Bhutan will enjoy an exemption. In fact, empty cargo containers coming from Nepal and Bhutan after delivering the goods will also enjoy a exemption. Let's see. It has been clarified that exemption notification shall cover services associated with transit cargo both to and from Nepal and Bhutan. In fact, movement of empty cargo containers will also enjoy a exemption. Okay. Then there is sanitation and conservancy services supplied to army and other central government and state government department. Remember, to government is taxable. By government enjoys a exemption. To government will be liable to GST. That's what CBIC has clarified, that to government sanitation and conservancy services will be taxable because this is not a function which is entrusted under Article 243G or 243W of the Constitution. You remember there was one exemption of pure services or composite supply where goods element does not exceed 25% when provided for a function under 243G or 243W of Constitution covering panchayat and municipality. Then exemption was available, not to army or central or state government departments. Okay. Another interesting clarification is GST on transport of minerals from mining pit head. Mining pit head, wherever that particular mineral was extracted, to railway siding for transportation, or beneficiation plant by vehicles deployed with driver for a specific period of time. Now think, transportation of minerals is happening. You have taken a truck on rent with driver. The question is, truck taken on rent, this is renting of vehicle or transportation of goods by road? Because let me tell you, if it is transportation of goods service by road, then it enjoys a exemption. If it is renting of vehicle, then it is taxable. So it will make a difference. So you think what it is? Taking a truck with driver for a specific duration. Sir, this is not transportation of goods by road. That's what CBIC clarified. It is not transportation of goods by road. It is renting of vehicle, which will be liable to GST. Okay. Okay, then there is one interesting one. Location charges and preferential location charges in addition to long-term lease. You remember long-term lease upfront amount enjoys a exemption. Now say suppose along with that upfront amount you are also paying some additional preferential location charges. That means a side property or a corner property or a property which is near the main road. For that you are paying preferential location charges. Will that also enjoy an exemption? CBIC has clarified. Yes, it will enjoy an exemption because principal supply is long-term lease upfront payment. Incidental supply is preferential lease charges. The taxability of upfront payment and preferential location charges will be same. Okay, just write same treatment. Okay. What about honorarium to guest anchor who come to television channels? Guest anchor, a fee is paid to them. Whether any exemption is there? CBIC said there is no exemption. It will be taxable. Yeah. However, if your turnover does not exceed registration limit, then you are not required to register. Then obviously you are not required to pay tax. Let's see. It has been clarified that services provided by guest anchors invited by TV channels for participating in shows attract GST liability. Obviously there is no exemption. But if aggregate turnover does not exceed registration limit, then not liable to register. Okay. Additional toll charges. Additional toll charges for not having FASTag. Will it be exempted? CBIC clarified that additional toll charges which is being taken, they take double in case FASTag is not there. That is also for accessing road or bridge. It will enjoy a exemption. Same treatment as toll charges. Okay. Now, ART and IVF, basically these are services in relation to pregnancy. Whether this will also be get covered under healthcare service? The answer is yes. Obviously, assisted reproductive technology and in vitro fertilization will be covered in healthcare service and will enjoy a exemption. Mark this important. Can get a question directly on this. Okay. Whether sale of land after leveling or laying down of drainage lines is taxable under GST. Now, you need to understand the basics. Negative list covers sale of land, no GST, because negative list covers sale of land. Now, before selling the land, in case some drainage pipes etc. are made and then the land is sold so that I get a higher value, then the land is sold, whether exemption will be available. CBIC said yes, it will still be covered under negative list. There will be no GST applicable on this particular transaction. So CBIC has said sale of land after leveling or laying down of drainage pipes will still be covered under negative list, because at the end of the day, even if you sell it after some modification, still it is sale of land only. But what about the services which you have taken? You have also taken, na? You have taken services of works contractor who made that laying of drainage lines, leveling of the land. Whether that will be liable? The answer is yes. The contractor providing services to landowner is taxable, but landowner selling land after all this will not be liable because it is covered by negative list. Okay. Then there is a circular on non-body corporate providing service to body corporate renting of vehicle. Now, for this you need to recall the RCM entry. Renting of motor vehicle provided by any person other than body corporate to a body corporate was covered under RCM. Now the question was whether non-body corporate providing to body corporate renting of motor vehicle, whether RCM is applicable on transportation of passengers or renting of motor vehicle. So is it transportation of passenger service or renting of motor vehicle? It is very easy to distinguish between transportation of passenger and renting. Check who has the control of the vehicle. If I have the control of a vehicle, I decide the specific time, I decide the route, then in that case, it is renting of motor vehicle, RCM will be applicable. But if it is a state run or a private run fixed point to point transportation and I don't decide everything, then in that case transportation of passengers, it will be covered under forward charge. So this is the distinction between renting and transportation of passengers. Let's read this properly. It is clarified that where a body corporate hires a motor vehicle for a period of time during which motor vehicle should be at the disposal of body corporate, I have taken the vehicle on rent, the service would fall under renting and liable under RCM. Okay. However, where body corporate avails passenger transport service for specific journey and does not take vehicle on rent for any particular period of time, specific journey, point to point journey, then in that case it is transportation of passenger and not covered by RCM. So the question is whether you have the vehicle at your disposal. If you have the vehicle at your disposal, you decide everything, renting. But if transporter decides this and you only give that this to this point, please get me transportation service for my employees, then in that case it is transportation of passenger. Okay. Okay, another interesting one was when you are taking a vehicle on hire, people, you are taking it on hire, that means you are exercising control over that vehicle. When you are taking a vehicle on hire and you are exercising control over that vehicle, transportation of employees, will it be exempt under transportation of passengers in non-AC contract carriage? People, the exemption entry of transportation of passengers gives exemption only for transportation service, not hiring service. If you have taken a vehicle on hire, then in that case, you will not be covered by the exemption of transportation of passengers. Vehicle on hire will be liable to GST. In fact, all these points are from the law. It's just that CBIC has now clarified all this. Okay, great. Then talking about private ferry. See, there is an exemption. Let me give you a recall of the exemption. Transportation of public transport in a vessel except for tourism purposes enjoys a exemption. So the question was public transport written in that entry. Does it mean government owned or it can be government or private? CBIC has clarified that public transport means open for general public. It does not mean whether owned by public, that is government, or private. Public transport will mean open for general public. If it is open for general public, then it will enjoy a exemption. But what about cruise? Cruise will be liable to GST because that is for tourism purposes. Let's see the entry. It is clarified that exemption would apply to tickets purchased for transportation from one point to another, irrespective of whether the ferry is owned or operated by private sector or PSU or government. Doesn't matter. It is further clarified that the expression public transport used in the exemption notification only means that transport should be open to public. It can be privately or publicly owned. Only exclusion is on transportation which is predominantly for tourism, such as services which may combine transportation, sightseeing, food and beverages, music, accommodation like shikara or cruise. Shikara or cruise are for tourism purposes, that will be taxable. Otherwise, even private ferry will enjoy a exemption because it is transportation of passengers in a vessel for public transport. Okay. The last exemption circular or the last circular is with regard to agreeing to an obligation or tolerating an act. Interesting circular which says that, say suppose I enter into a contract for you to supply me 10,000 pens. So what I want from you? 10,000 pens. There is a clause written in the agreement that in case you don't supply me 10,000 pens, then I will get 1 lakh rupees for breaching the contract. Now the question was whether this 1 lakh rupees for breaching the contract is a supply for consideration in the course or furtherance of business. Is breaking a contract a supply? See, one is supply where you are supplying pens. Second is breaking a contract. Is it a supply? Did you enter into a contract for breaking it? Did I enter into that contract so that I earn 1 lakh from you and you break the contract? This was a confusion from last 5 years. Finally, CBIC has clarified what is the meaning of agreeing to do something and agreeing not to do something. The key factor is you have to agree not to do something. For example, non-compete fee. Say suppose you and I are in the same business. I tell you, take 50,000 rupees per month, please don't compete against me. And we enter into a non-compete agreement saying that you will not compete against me and for this I am paying you 50,000 per month. Then supply, because we are agreeing not to do something. But in breach of contract or breach of law, the intention was not breach. Finally, CBIC has clarified that you don't have to pay tax on breach of contract. You don't have to pay tax on breach of law. If a law is broken, then in that case, GST would not apply on that. If there is a positive agreement, then only GST will be applicable for not doing something, because the key word is agreeing not to do something. If you agree not to do something and we positively enter into an agreement or contract, whether oral, written, then in that case it will be liable. But if the main part of the contract is something else and breach is a small pointer, then in that case that breach liability is not a supply. This has been clarified by CBIC. Very important for examination purposes. Let's have a look at the specific point which CBIC has touched upon. Examples which are liable to GST. So these are agreeing to do something, agreeing not to do something. You are entering into a contract and you are agreeing not to do something. And examples which are not liable, these will be breach, where the intention was not to break the contract. Now, let's read this part first. In all these cases, there is a positive agreement for performance of such activities. There is sufficient nexus between supply and consideration, and one of the parties is under a contractual obligation to tolerate an act or to do an act. I am agreeing to tolerate that act. I am agreeing not to do that. Positive agreement. Let's see. Non-compete fee. I enter into a contract that I will not compete against you. You can use this language for all your answers. For all these examples which we are going to read, you can use this language in your examination. Non-compete agreement. Do you agree there is a positive agreement? I am agreeing not to compete against you for a consideration. Builder refraining from constructing more than certain floors. Builder is not constructing more than certain floors, even though he has permission, against a compensation paid by neighboring housing society which wants to protect its sunlight. See, I live in a 16-floor building. Next to me, one more building is coming up, which is proposed to be 25 floors. Now, I, along with my society, go to this builder and say, please don't construct 25 floors, construct 16 floors. Whatever is your loss for 9 floors, we will pay you. And he agrees to this and we sign a contract and we pay him. Then in that case, this will be liable to GST, because builder is refraining from constructing. Builder is refraining even though he had permission to do that. Shopkeeper allowing a hawker to operate from a common pavement in front of his shop. This you have seen, hawkers, footpath, they are doing their business on footpath and paying to the shop owner. So shop owner has agreed that you can do business from the footpath in front of my shop. Compensation for not collecting toll charges. This had happened during demonetization, where government had banned 500 and 1000 rupees notes. That time government said, please don't collect toll charges for some time, I will compensate. So that is, again, you are agreeing not to do something. Positive agreement is there. Agreement is there for that only. Late payment charges agreed by bank and customer, because this was agreed that late payment charges will be applicable. This is part of the contract as a main pointer whenever you open the bank account. Cancellation charges, which is a common industry practice like hotels and flight. There is a complete harmony in this, because cancellation charges is charged because I am blocking a room for you, and if you don't come, then that room goes waste for me. I cannot give it to any other person. Cancellation charges, which is a common industry practice, again that will be liable. Now let's see examples which are not liable to GST. Liquidated damages for breach of contract. Damages for not following a contract. That is not a supply. There is no persons get into a contract so that the other person breaches and I earn from that. Compensation given to previous allottees of coal blocks for cancellation of their license pursuant to Supreme Court order. See, earlier coal blocks were given to some persons. Supreme Court cancelled all those allocations, saying that the process followed is not correct. You should have done an auction, and the government has lost money because of this. So all those coal block allottees who lost this, government paid them compensation. Tell me one thing, did that coal block allottees enter into a contract so that the other person breaks it? Such compensation will enjoy a relief. It's not a supply. Compensation for piracy. No one enters into a contract saying that, yeah, pay me 10 lakh and you are allowed to sell as many copies you want and do piracy. Check dishonor penalty. Penalty imposed for violation of a law. Traffic police fine. No supply. Forfeiture of salary. This is important. Forfeiture of salary in the event employee not serving notice period. Say suppose there was a notice period of 2 months, saying that if an employee wants to quit, he has to give a 2-month notice period, or he has to pay X amount. People, employment contract, did we enter into employment contract so that the other person breaks that 2 months notice period and we get 2 months payment from him? Again, that is not a positive agreement. Forfeiture of earnest money by seller in case of breach of agreement to sell immobile property. Now, normally when a immobile property is to be sold, we generally enter into an agreement saying that pay me 5 lakh advance, thereafter you check the papers, pay me the balance amount, I will transfer the immobile property to you. That 5 lakh advance was forfeited. Should GST apply on that? No, because the intention was not to earn that 5 lakh. The intention was to sell the immobile property. In such cases, what is the common point? In such contracts, performance is the essence of the contract. I want that to happen. I am not entering into a contract so that the person breaks it. These are payments for not tolerating an act. These are not desired outcomes of the contract. These are not my desired outcomes. I don't want this from the person with whom I have entered into a contract. Yes, revise this 2 times. Okay, now come to your notebook. In your notebook, you will get a heading RCM amendments. Now, under this RCM amendments, you will write supplier, Second column recipient. In the supplier column you'll write renting of residential dwelling. And in the recipient column you'll write registered person. So if a residential dwelling is given to a registered person, then the registered person will have to pay the tax. It does not matter whether residential dwelling is given as residence or for any other purpose. If it is given to a registered person will pay the tax. Doesn't matter who the supplier is. Doesn't matter whether supplier is registered or unregistered. Okay. Second, you remember there was a point government or local authority to business entity. Now government or local authority to business entity, it excluded first three limbs. First three limbs meaning, sir, that department of post, then transportation of goods or passengers, then aircraft or vessel, because these three are covered by forward charge. Then what has changed, sir? This though we already know. Now first three limbs, the first limb which was there, department of post, earlier it said only 4 services: speed post, express parcel post, life insurance, agency services, because only these 4 were taxable. Now any service by department of post is taxable. Okay. Then the third one is GTA. GTA providing service to registered person or specified person. Now earlier this is how the law was: GTA not paying tax at 12%. Now this not paying tax at 12% is deleted. Not paying tax at 12% is deleted, sir. Yes, not paying tax at 12% is deleted. That means, sir, GTA providing to registered person, specified person, is it RCM? Let me tell you. Earlier, GTA had an option to pay under forward charge only if they are paying 12%. Now they have an option to pay under forward charge even if they are paying 5%. If GTA has taken GST registration, then it will be covered under forward charge. Registered person or specified person is not required to pay. Let me give you a summary for this. You can just write note 1, and just below this you write note 1 GTA. Now I would request you to have a look at this, then you can make a note. GTA providing service to unregistered person, this is exempt, and here the law says other than specified person. Who are specified persons, sir? Factory, society, cooperative society, partnership firm, body corporate, casual taxable person. Because registered person or specified person are covered under the second part. Now if GTA has taken registration and opts to pay under forward charge, if GTA has taken registration and opts to pay under forward charge, then obviously it is taxable under forward charge. And here government has written cannot change for a financial year. You cannot change it for a financial year. Once you opt to pay under forward charge as a GTA, you cannot change your option. Plus, there are 2 rates given: 5%, 12%, depending on whether GTA wishes to take ITC or not. but that rate notification is not there for your syllabus. Rate of GST will be given in the question. The moment GTA is registered and paying tax under forward, no reverse charge. That is where you have to be careful. If GTA is unregistered, then who will pay the tax, people? Then the registered person or specified person to pay tax under RCM. And sir, if GTA does not opt for it, forward charge, yeah, if GTA does not opt for forward charge, automatically it will be covered under reverse charge mechanism. Does not opt for forward charge. Clear with this? Yes. So what you are going to do is, you are going to draw this. In your question, it is going to be very simple. If GTA is paying tax under forward charge, don't keep it under reverse. If GTA is not paying and you are a registered person or specified person, create a liability under reverse charge mechanism. Okay. Now you will continue. Give a heading, registration amendments. Under this, first section 29, suo motu cancellation by proper officer. See, suo motu cancellation by proper officer, there was one point that if you not file return for 6 months, then officer can cancel your registration. Slight amendment in that. And for composition it was 3 quarters. That has changed a bit. What has changed, sir? Not filed returns for 6 months, and within bracket you will write 2 quarters for QRMP filers. You remember QRMP? Quarterly return monthly payment. For QRMP filers it is 2 quarters. For others it is 6 months. And for composition taxpayer, not filed returns beyond 3 months from due date. Beyond 3 months from due date. Now, let me tell you what does a composition taxpayer file. GSTR4. Due date for GSTR4 is 30th April after financial year. Now, after 30th April, he has not filed for 3 months. After 30th April, he has not filed for 3 months. Then, officer can suo motu cancel the registration. Understood? Okay. Second, if a person during suspension files the pending returns comma before cancellation comma then suspension is deemed to be revoked. Suspension is deemed to be revoked. Interesting point. Say suppose I have not filed return for 6 months. Officer will issue a notice and he will suspend my registration. Now the moment officer suspended my registration, I woke up and then quickly filed all the returns, paid all the taxes. Now once I have filed all the returns, paid the taxes, will he cancel my registration? The answer is no. It is deemed to be revoked. Deemed to be revoked, sir. Yes. Because he cancelled it because I have not filed the returns. Now I am filing the returns and paid all the taxes with late fee. Then in that case, it is deemed to be revoked. But be careful. This should happen before cancellation. Sir, what if it is after cancellation? After cancellation, then you know very well, section 30, you can make an application for revocation of cancellation. This point is before cancellation. Clear? Okay. Below this you will write ITC chapter amendments. In first point you will write section 16, sixth condition added. Sir, sixth condition added meaning? See, earlier there were 5 conditions, only then you can avail ITC. First one, you have received the goods or services. Second, you are in possession of an invoice. Third, supplier has paid the tax to government. Fourth, a valid GST return is filed. Fifth, which was added last attempt, supplier has furnished the data in his GSTR1 and it is communicated in GSTR2B of the recipient. Now government has added sixth condition. ITC is not restricted under section 38 of CGST Act. This means that system will tell us that ITC is restricted, and if system tells us that it is restricted, you cannot take ITC. We will learn this in 38 in GST return amendments. In some time we will see GST return amendments. There we will read section 38, where all can system restrict that you will not get ITC on these cases. Okay. Second, time limit for availing ITC. Now time limit for availing ITC is 30th November after financial year or date of filing annual return, whichever is earlier. See, this was due date for filing September month return. This is changed to 30th November after the financial year or date of filing annual return, whichever is earlier. Okay. Third one, non-payment within 180 days to supplier. You remember there was a point, non-payment within 180 days to supplier. If you don't pay within 180 days to supplier, you'll have to reverse ITC along with interest. Now government has said that reversal of ITC plus interest to be reported in GSTR 3B. And who will report it? Recipient. In his GSTR 3B, he has to report that he has not paid the supplier within 180 days, and that's why he is reversing ITC, paying interest. Don't forget, interest now will apply only when ITC is availed and utilized. Until and unless it is utilized, interest will not be applicable. Okay. There was a point in this that proportionate reversal will be done. That proportionate reversal point is deleted. It was deleted by mistake. Don't worry, after 31st October they have again added proportionate reversal. So So May 23 will be the only examination where proportionate reversal is not there. I'll give you an example. 100 rupees, GST 18 rupees, total 118. If you don't pay 118, then you have to reverse 18, correct? So if you have paid 59, then you had to reverse only proportionate, because half you have paid, then reversal will be half. Reversal will be only 9 rupees. Here non-payment of 118, reversal was 18, and non-payment of 59, reversal will be 9. For May 23 exam, reversal, even if something is not paid, will be 18, not 9. May 23 will be the only examination which will have this, because government realized this mistake very quickly, and after 31st October they have again amended it, saying that proportionate reversal will apply. So for May 23, even if some amount is not paid, full reversal, which is nonsense, but for May 23 that will be applicable. Okay. There is one more change. Earlier provisional ITC was there, now it is replaced by self-assessed ITC. We will see that in return amendments. Also, composition scheme. You remember certain cases where composition scheme was not available? Composition scheme was not available if you are a manufacturer of specified products, and those specified products were pan masala, ice cream, tobacco, aerated water, bricks and tiles. Now bricks and tiles, there was a specific point, fly ash bricks. Earlier there was a confusion, what about fly ash aggregates, because law had mentioned fly ash aggregates 90% or more content. Now that is all deleted. Now it will be fly ash bricks or aggregates. All types of bricks and tiles in that category will be covered, be it building bricks, be it bricks of fossil mills, be it fly ash bricks or aggregates. All this will be covered in bricks and tiles. Same thing for bricks and tiles applicable for registration, because you remember pan masala, ice cream, tobacco and bricks and tiles are also mentioned in registration, where they don't get 40 lakh limit. 40 lakh limit is not available for these four. And composition scheme, for 5 you don't get composition scheme. Clear? Okay. The last chapter in which changes have happened is GST returns. You are going to give a heading in your notebook, GST returns. In that, Roman 1. NRTP due date is changed. First, let me give you a recall of what it was. NRTP due date was 20th of the next month or 7 days after last day of valid registration, whichever is earlier. Due date is, next line, A, 13th of the next month. Why has government done this, sir? So that he can report it by 13th, and the person who has purchased from NRTP gets this in his GSTR 2B, and based on that he can avail ITC. Recipient should be able to avail ITC. So 13th of the next month, or B, 7 days after last day of validity of registration, comma, whichever is earlier. Whichever is earlier. Okay. Then, and mark this important, institute can ask you question on this. Roman 2. section 37, that is GSTR1. There also changes have happened, sir. Yes, GSTR1. In fact, returns, major changes have happened. See, this was expected to change on 1st Jan 2023, but government released the notification and said it is effective from 1st October. So, a lot of changes have become effective from 1st October. Okay, GSTR1. A. Last date for rectification. Last date for rectification of errors. Now, last date for rectification of errors. Earlier it was date of filing September month return or date of filing annual return, whichever is earlier. Now it will be 30th November after financial year or date of filing annual return, comma, whichever is earlier. This is a consistent change which has been updated in all the provisions. B. If GSTR1 for previous tax period is not filed, comma, then it cannot be filed for current tax period. Current tax period. Understood, people? So if you have not filed previous GSTR1, you will not be able to file current GSTR1. C. If GSTR3B for previous tax period is not filed, comma, then it cannot be filed for, now better instead of it you write, then GSTR1 cannot be filed for current tax period. So government is completely linked. File 1 with 3B. If you don't file 3B of previous month, gone. 3B of previous quarter, gone. What will happen because of this? This point was already there. What has been added is this. And this has created a clarity that you follow sequence order. Now, why have I mentioned B and C both when C is already there in our book, sir? Because for these two, government may, on the recommendation of GST Council, allow prescribed registered persons to file it even if this is not followed for one or more tax period. So government could specify that, say suppose even if you have not filed GSTR1 of previous month, there will be certain persons who will be allowed to file GSTR1 for current month even if last month is not filed. Nothing prescribed till now. People, in future they can prescribe, but nothing prescribed till now. Till now, nothing has been prescribed in section 37 where a relief is available. Clear? Okay. Now, then you'll write Roman 3, section 39, which deals with GSTR 3B, 4 and 5. Careful. Section 38 also has been amended, but first I want to complete 39 because 39 amendment is similar to 37 amendment. 3B, 4 and 5. What is the amendment, sir? See, one was due date of NRTP, which I've already got you changed. That was GSTR 5. That we have already written. Now, A, last date for rectification. So, last date for rectification of any error. Here also it is 30th November after financial year, or date of filing annual return, comma, whichever is earlier. Okay, sir, this is fine. Now comes the new point. If GSTR 3B for previous tax period is not filed, comma, then it cannot be filed for current tax period. This is new. People, earlier there was no such restriction, but now 3B you can file for August only if you have filed July 3B, December only if you have filed November 3B. Same for 4 and 5, GSTR 4 and 5. Okay, see, if GSTR 1 for current tax period, people, careful, this is different. Current tax period is not filed, then 3B for current tax period cannot be filed. Dangerous. Cannot be filed. See this carefully. June month, first you have to file GSTR 1, then you can file 3B. You cannot directly file 3B. Is it, sir? Because GSTR 1, if you have not filed for current tax period, you will not be able to file 3B for current tax period. 3B for previous tax period not filed, you will not be able to file 3B for current tax period. File all the returns on time. That's what government is saying. And these 2 points, same government may allow on the recommendation some exceptions where you will be allowed to file these returns even if you have violated these 2 points. This is same as 37. Clear? Okay. Now comes the important one, section 38. Communication of ITC. Next line, A. An auto-generated statement, within bracket you will write GSTR 2B, will be made available on the common portal to every registered person full stop. It will contain details of ITC which may be available and details of ITC not available. Oh, people, they will provide you that this ITC may be available. Out of that, you can choose what is eligible, what is not eligible. And they will also give you something which is not available for sure. First class. You see the wordings here, which may be available. We don't know. You check. You check whether it is available or not. And ITC which is not available. They will tell these are not available. Clear? Okay. Now, monthly GSTR to be is generated on 14th after each month. And quarterly to be is also available. Is it, sir? Yes. Quarterly GSTR to be is available on 14th after each quarter. For example, monthly GSTR to be, it's generated on 14th. On 14th, you'll have previous month data of those who have filed GSTR1 by the due date. All your suppliers who have filed GSTR1 by the due date will be communicated to you in GSTR2B. Sir, what about those who file after due date? Those who file after due date will be communicated in next month GSTR2B, because this gets generated on 14th. Okay. See, this you already knew. What is additional is this. Now B. ITC will not be available for invoices / debit note furnished by the following suppliers. So people, there are some specific points. If it is furnished by the following suppliers, you will not get ITC as a registered person. Who can be these suppliers, sir? Dangerous points. Let's see. 1. A registered person who has defaulted in payment of tax and the default continues for prescribed period. At present, this period is not prescribed. That will happen in future, but at least May 23 exams are safe. This prescribed period is not there till now. Government has not said ki if a person does not pay for 2 months, I will block the recipient's ITC. Till now, government has not said 2 months, 3 months, 4 months. That's not mentioned. Prescribed period. Clear? So, you may think that this would not come in exam. That is my view. But as it is an amendment, I have to teach you. Because this can come in exam only when this period is prescribed, right? At present it is a raw provision. Once it is prescribed, thereafter it becomes a complete legislation. Raw provision has been added in the law. In real life, we are not seeing this as of now because period is not prescribed. And we don't have to do this, system will only do this. System will see that this supplier has not filed for 2 months, let's block ITC for all the recipients. Sir, this is crazy. Yes, it is crazy. The day this comes, government revenue will increase because we will start losing ITC. If we lose ITC, government starts earning more. This is cheating, sir. If you have understood that this is cheating, trust me, you have understood the provision. Second, a registered person whose output tax payable as per GSTR1 exceeds output tax paid in GSTR 3B by such percentage as may be prescribed. As may be prescribed. As may be prescribed. Is it prescribed, sir? No. People, that's why I am telling you, all these are not prescribed as of now. But you understand the point. I purchased from Mr. B. I purchased from Mr. B. Now Mr. B, you know what he has done? In GSTR1 he has reported 100. Tax 18. And in GSTR 3B he has reported 10 rupees. Tax 1.8. Sir, that means your supplier is eating government's money. Correct. If the supplier is eating government's money, then government will eat my money. Huh? Because anyone who purchases from this person will not get ITC. Huh? Yes. And who will decide this? System will decide this. Now this percentage is not prescribed. By how much? Say suppose they will keep a percentage that 5%. Say suppose 100 is reported in GSTR1. If you report 98 here, no problem. But if you report 90, then government may have a problem. If you report 10, obviously government will have a problem. So percentage is not prescribed as of now. Okay. Third, a registered person who has availed ITC in excess of ITC as per his GSTR 2B by such percentage as may be prescribed. By such percentage as may be prescribed. Sir, is it prescribed? No. So this is crazy. Huh? If your supplier has taken more ITC on his purchases, your ITC will be restricted. Trust me, people. Will you purchase from such persons? No. Will not purchase from such persons, sir. That's what government wants. Government wants to clean up the entire system. All those who are doing cheating, government wants to remove them. But sir, if mistake happens, suffer. Fourth, a registered person who has not followed / contravened Rule 86B, read with section 4912. What is Rule 86B? You already know. Rule 86B, 1% through e-cash ledger. But people, 1% through e-cash ledger, this is applicable only when your taxable supply exceeds more than 50 lakh in that month. Plus, if you have paid income tax for last two preceding financial year of more than 1 lakh, it will not apply. GST refund you have got last financial year, more than 1 lakh, again it will not apply. Government department, it will not apply. Cumulatively, if you have paid more than 1% up to the said month, it will not apply. So if you are covered under Rule 86B and if you have not followed it, then again your recipients will not get ITC. Last one, a registered person for such period after taking new registration. This is the most dangerous one. People will not take registration because of this. Government is saying such period is not defined, but government will say once you take registration, next 30 days your recipient will not get ITC. This is crazy. That means government wants me to stop business for first 30 days. We are waiting what government says in this. Whatever government says in this will be dangerous. Clear? Okay. Last one. Any other class of registered persons as may be prescribed. After writing so much, government wants another power that I could mention others also in this. Very, very wide powers. Once this gets activated, it's going to be dangerous. At present, this is not activated because at present it is a raw provision. It says prescribed. It says prescribed. It says prescribed such period. At present, it is a raw provision. Okay. And the last change in returns chapter, Roman 5, section 41. Availment of ITC. Let me tell you, earlier provisional ITC was allowed. See, one of the conditions to avail ITC is supplier has paid the tax to government. But it was impossible to track whether supplier has paid the tax to government. So government has said you can take provisional ITC. This we studied in section 16, conditions to avail ITC also. One of the condition was supplier to avail ITC. Supplier should have paid the taxes. Now government has modified that provisional ITC. Let me make you write this, then I will explain you. ITC can be availed by registered person as self-assessed by him. Now not provisional, self-assessed. You self-assess how much is your ITC. B. If the supplier fails to pay tax to government, then recipient has to reverse ITC along with interest under section 50, and you know interest under section 50 is 18% per annum. So you'll have to reverse it along with interest. Full stop. Or 1 minute. Along with interest under section 50 in the manner as may be prescribed. As may be prescribed. Sir, is the manner prescribed? No. In the manner as may be prescribed, but the manner is not yet prescribed. See, government may say that if your supplier has not paid for 2 months, then you reverse ITC, which you have taken. That government can do. And you will have to reverse with interest. C. a registered person can re-avail ITC after supplier pays tax to government. People, the moment supplier has paid the tax to government, can you re-avail ITC? The answer is yes. So what is your cost? Interest. But in my view, this is complete cheating because government is earning interest from you. Plus, the supplier has not paid the tax. So government will earn interest from supplier as well. This is called as double interest for one loss. Understand this. You had taken ITC. You will pay interest. Correct. Now that money supplier has not paid. Government will collect tax from supplier along with interest from there also. The government has earned double interest. Are you clear with this? Yes. Okay. These were the changes in returns chapter.